Here. Well, my guest today is Nick Maccorrone with Oxford Mortgage, and he is the expert on VA loans. And I figured he's a great resource for all of us. So let's get started. So Nick, question for you, and that is, can you explain what a VA loan assumption is and how it works?
Yeah, absolutely. So good to be here, Rick. Thanks for having me on. So a VA assumption, all it means is that you're taking over a VA loan that's already in existence. Okay, you're not going to go to, your own personal lender, get a VA loan for yourself.
Right.
A VA assumption means that if I'm buying your home, Rick, and you have a VA loan on it, I'm going to assume your loan. I'm going to take over your loan and not go to the bank and get a new one.
Awesome. So what are some of the benefits of assuming a VA loan for military veterans?
Well, yeah. So, I mean, really, the main reason you would do it, and the only benefit to really assuming something, is that if you're buying in a market right now where rates are a little bit elevated, and you say you're assuming a VA loan that was generated back in 2021, and let's say it's at 3%,
right?
You would be able to take over that loan at 3% as opposed to taking on, a 5.625 VA loan right now.
What are some of the eligibility requirements for assuming a VA loan?
Well, so ideally, if the new buyer is VA, assuming that VA is easier and it's better for the seller, you do not have to be you do not have to have VA eligibility to assume a VA loan, believe it or not. Yeah.
Interesting. So does that mean that a regular civilian can assume a VA loan?
It does. It does.
Oh.
So here's the rub on that, though, is that VA eligibility, someone's VA eligibility is required for that loan.
Okay.
That seller used his VA eligibility to obtain that when he bought.
Right.
If I buy yours, I know you're a veteran, I'm not. If I assumed your loan, your VA eligibility would still be intact. It'd still be in use on that loan. Kind of almost in like a perfect scenario, right? Where let's say the seller is selling and they're going to buy a home somewhere cash and they're not worried about it right here in the short term, right? But that's pretty rare. So ideally, the seller's going to want a veteran to assume that loan so that they can have their eligibility restored. So, I mean, so some of this, I think, Rick, gets overthought just a little bit, right? So as far as the sale is concerned, the sale is the same.
Right.
So, but the cool part is when if a veteran assumes a VA loan, the VA is going to utilize the buyer's certificate of eligibility, freeing up the sellers.
Oh,
and then it would just be like he sold and the person got their own loan and
right.
And
so it's basically a win-win in that situation.
That's exactly right. That's
nice.
Exactly right.
Awesome. And what is the process for assuming a VA loan, and approximately how long does it take?
Yeah. So what ends up happening is that the new buyer, they need to get pre-approved with the seller's lender. The bank that holds the loan is the one who's going to approve that buyer and say, yep, this person's qualified. We're going to do this assumption.
All right.
So assumption turn times are a little tricky. What we're hearing is that a lot of assumption departments aren't quite up to par as far as quick turn times.
Okay.
I just talked to someone the other day in the office that said they had a buyer that assumed the loan and it took about 65 days.
Okay.
So again, assumptions are great. But there's some things that oftentimes the seller's going to have to be okay with, right? Like
right.
a little bit longer of a close, potentially not having their VA certificate of eligibility restored, things like that.
Okay. Now, what are some of the documents required for the VA loan assumptions other than the buyer getting in contact with the seller's lender?
Yeah. So it's going to be very similar to getting pre-approved by me, let's say, right?
Okay.
You're going to need your certificate of eligibility, 30 days pay stubs, bank statements, tax returns, all those things. They're financial documents. And that's because the first step is getting approved, right? Like we will do your loan. And then the assumption will start once there's a contract in place.
Gotcha. Okay. Two-step process.
That's right.
Right. Okay. Okay. And how does the lender evaluate the credit worthiness of the potential buyer?
So
just
same
like
as
any
I,
other.
yep, same as
Okay.
I would when I did, your loan, for example, Rick. When you
Right.
come to me, I say, hey, your credit score is X, excellent, it meets these requirements. Your debt to
Gotcha.
income ratio is Y, we need to keep it, in these levels. So they're going to do the same things. They're going to want the minimum credit score met, debt to income ratio. They're also going to be running it through VA's automated underwriting system,
Gotcha.
right? And making sure that it picks up that automated approval. So on the front end, for the buyer, it's going to feel very normal, for lack of a better term, right? They're just going to be
Okay.
going through a pre-approval process to buy this home.
Right.
Now, here's one other thing, and we may get to this in a minute, but one other thing that the buyer needs to be prepared for is if they're buying a home and they're assuming a loan that let's say the seller bought 7 or 8 years ago,
Okay.
and the market has appreciated to whatever,
Right.
and he's buying a $700,000 house,
Mm-hmm.
and the buyer, let's say the seller threw a bunch of money at it, maybe even put down payment on this VA loan,
Right.
and they owe 500,000.
Gotcha.
Well, you've got a little bit of a situation potentially there, because you're
Mm-hmm.
taking over a loan at 500,000,
Mm-hmm.
but you owe the seller 7.
Gotcha. So there's that delta of 200.
Yep, exactly. So
Okay.
they would have to come with their own down payment in that scenario.
Okay. So in a situation like that, would there be another secondary loan in this case to
So
finance?
yeah, that's tough, right? There are secondary loans out there. They're hard to find
Uh-huh.
because nobody really wants to take that second lien position
Mm-hmm.
to 100% financing.
They
Risk would
muzzle
be
the
all
money.
on that second lender in the case of a foreclosure or a short sale. So
Mm.
that's why in a lot of cases, Rick, assumptions don't work, because with a lot of VA buyers, at least their ideal situation is, hey, I want to utilize 100% financing,
Mm-hmm.
right? And if they're assuming something that's a little bit older, that might be a challenge. Now,
Okay.
if they're assuming something from a year or so ago, year and a half ago, before rates went
Mm-hmm.
up 2 years ago,
Okay.
those oftentimes will work,
Okay.
right? But
So
the
in that
stuff,
case, yeah, they're not paying so much
that's right,
as that second loan. They might have the cash,
right.
yet they're getting a better rate.
Well, and that is where an assumption by a conventional buyer
Uh-huh.
oftentimes will work in the situation, as long as the seller is okay with not having their eligibility restored.
Okay.
Because if I'm going to buy your home and I'm prepared to put 20% down on something,
Mm-hmm.
but you have a 2% VA loan with no mortgage insurance on it, right?
Mm-hmm.
Well, I want that loan, but I was already prepared to bring 20% down on
Gotcha.
another house, right?
Oh,
So
right.
so that might work.
Okay. Now,
Okay.
is there anything, I understand that there's many similarities between, the process is virtually
Yeah.
identical, like as a fresh buyer versus
Right.
an assumption buyer. Now, what is there any difference that happens with the VA appraisal in this case?
Um, that's it. So that's lender specific.
Okay.
Okay. So you might have some lenders that are like that, where they offer waivers. Now, VA in itself doesn't allow appraisal waivers, right? When you run automated findings,
Yeah.
VA and FHA, you get an appraisal.
Right. Regard.
Conventional, if you put enough down and it likes your scenario, you may get a waiver.
Mm-hmm.
But that investor who is servicing the loan
Mm-hmm.
may or may not require an appraisal. I would guess that in most cases, they're going to require an appraisal, just because on their end, from the lending standpoint, getting pre-approved,
Mm-hmm.
it's a new buyer.
Right.
Right?
Right. Right.
Yeah. Now, it's
Okay.
not always the case. So
Uh-huh.
there's a chance that may not be required, but that'll be bank specific.
Okay. Gotcha.
Yep.
Okay, that makes sense. Now, and assuming, okay, yeah, I think we did cover this in terms of, how is it regarding interest rates? Of course,
Right.
it's a no-brainer. You're getting something at a lower interest
Yeah.
rate than
That's
you
that's
are
the
at what
benefit,
the current
right?
market
That's the
value.
benefit.
Right. Okay.
Yeah. Again, so you just have to weigh those out, though, right? Because if you've got, because I think rates are starting to improve, kind of slowly but surely. It's been taking
Uh-huh.
a while, but they're starting to improve. Locked a VA loan today at 5.625. Okay. So
Okay.
you're starting to get closer, right? So if you've got somebody who's trying to assume, say, a 4.5% VA loan,
Uh-huh.
They may choose to not do that
Right.
because the rate it would be higher, but they may not have to put any money down. There's
Right.
not
Right.
that gap, right? Where they're like, oh
Gotcha.
shoot, we can either go to 5.625 and do 100% financing, or we go to 4.5% and I got to come up with 75,000 or whatever the number is. We're getting a little bit closer where I think you actually might see in the next year and a half, fewer assumptions.
How about closing costs? How does that work on an assumption?
Yeah, so you're still going to have your title fees.
Mm-hmm.
You're going to have to set up a new escrow account, right? Things like that, because
Mm-hmm.
it's different insurance, potentially updated tax numbers, things like that.
Mm-hmm.
County recording fees, but you're not going to have. I mean, there will be an assumption fee. It's going to be specific to the bank. It's not a huge number, but you're not going to have, what am I trying to say? Discount points
Mm-hmm.
and things like that. So typically it will cost less now
Okay.
to assume than to not. Now, here's the one thing, Rick, you remember, like when you've done VA loans in the past, a lot of times what happens is people will choose a rate that has a credit coming back to them to pay closing costs.
Right.
Right. So they're doing
that.
100% financing and say 6% has a, making up numbers here, $4,000 credit to help pay closing costs.
Right.
That won't happen on an assumption. The rate is already set. There's no credit. There's no cost. There's none of that.
Okay.
So, but I will say, typically, if you're going par rates on a new purchase, typically it's going to cost a little bit more a little bit less on an assumption, because there's not going to be any buying rates down and stuff like that. You're just going to have your title fees, county recording fees, those kind of normal parts of the transaction that happen no matter who you use for financing. Okay.
Okay, gotcha.
12 months of insurance, stuff like that.
This might sound like a weird question. I'm sure people have this on their mind. On an assumption, is there such a thing as PMI or no? Because it's VA.
Yeah, so no PMI.
Okay, so that's
no PMI on that. Obviously, with VA. Now, if you're assuming an FHA loan, there would be the mortgage insurance that would already be on that you would be taking on. So I know we're talking VA, but let's say an FHA buyer, for example, or an FHA assumption. That's where a conventional buyer would have to decide if it's better to assume that FHA loan or to get a higher rate with no PMI.
Gotcha. Okay.
Right. But VA has no PMI. So yeah.
Okay. All right. Yep. Gotcha. And let's see. Can all VA loans be assumed, or are they just specific requirements?
Yeah, VA and FHA loans are all assumable.
Okay. Good.
Conventional loans aren't automatically assumable. There are some that specific banks will allow for assumptions on their loans, but FHA and VA are assumable.
And the assuming buyer finance their assumption with the new VA loan?
No, if they get a new VA loan, then they would just be getting a new VA loan. I will say, Rick, I mean, you and I have been in the business a long time, and assumptions still are a little confusing because they've just never had a place in the market. I think the easiest way to think about it is it's really just going to it's almost like going to a bank. If you're shopping lenders and there's this one lender whose rate is 3% lower than everybody else's, right? That's all it is at the beginning. It's just, I'm assuming I'm going to try to get approved for this specific loan with this specific lender because his rate is so much lower. And then there's some cute things that the buyer has to do as far as down payment, potentially things like that, because they, where the loan amount is to the purchase price. But at the beginning, it's just shopping like my rate. Let's say they come to me first and I get your buyer all pre-approved and they're happy and this and that. But then you go find a home which, like, holy cow, this guy's got a VA at 2%. They want to try to assume, and he just bought a couple years ago and he's going to sell it to them. They're not going to put any money down, whatever. Then he would just choose that bank. Right. Yeah. Okay. So yeah, it would just, a new VA loan would just be a new VA loan.
Okay. Gotcha. Okay. Now, are there any funding fees involved on the assumption?
No, nothing new.
Okay.
Just whatever was there initially.
Okay. Yeah. Okay, good. Now, I don't know if you touched on this, but can the seller assist with closing costs or the funding fee? if there, well, there's no
Yeah, they
financial.
can. Yes, they can absolutely. Just like any transaction, right? Like your buyer can ask for a seller concession,
Okay.
right?
Okay.
Because at closing, it'll look similar to what
Okay.
you have come to expect when we go to closings, right? It'll be a closing package for real estate and loan, right?
Gotcha.
Yeah,
Okay.
so a lot of that will look similar. So if there are closing costs, the seller can help.
What are some of the risk and liabilities that the sellers and buyers assume in VA assumptions?
So yeah, listen, once it's assumed, let's talk about the buyer first. Once it's assumed, nothing. It's their loan on their home.
Okay.
Yeah.
So if, for example, the new buyer that's assuming the loan goes into foreclosure, it's going to have zero impact on the original. Is it
Unless
or is it
that
not?
yeah, unless that seller who allows the assumption is still using their eligibility. So if
Okay,
I
then it could
assumed
impact.
your VA loan
Okay.
and they foreclosed,
Yeah, it's going to impact the seller.
it's going to affect the
Right.
seller's eligible certificate of
Right. But if
eligibility
it
moving
was a
forward.
veteran, for example, with their own
Right.
eligibility, it's only going to impact them and not
That's
the
right.
seller.
That's right.
Okay, good to know. Now, how does the lender protect itself in a VA loan assumption?
Well, they just yep, it's a good question. They just put them through just like any other loan. They're going to put them through kind of a rigorous,
Okay,
pre-approval underwriting process. W-2s, pay stubs, bank statements, credit reports. Make sure they can meet all the requirements that VA
right.
has. Yeah,
Gotcha.
and then it'll
Gotcha.
be
Just like
just
any
like
other.
normal. Yep.
Okay, is it any different for townhomes or condos?
No, I mean, unless something has happened where if you've got, and this is pretty rare, Rick, but if you've got a condo that's not VA approved anymore, so if
Okay,
you bought a home and it was VA approved, a
right.
condo, and then it wasn't,
Uh-huh.
you potentially could run into a problem there
Okay,
where VA is saying, we really are trying to get out of this condo. We'd rather just
right.
stick with this home and get paid off. We don't really want to have a loan in this anymore, in this complex, but that's very rare.
So in that
So
case, the new veteran, for example, that loves this property, this condo, and only comes to find out that it's no longer VA approved.
right. Yeah.
Uh,
I mean, then he would
uh,
theoretically need to get a conventional loan.
yeah,
Now, I will say VA's approval process for condos is much kinder than
yeah,
FHA's.
right.
It used to be if VA and FHA, they kind of moved together and you would look and see, and they were both, everything was approved together or not approved together.
Mhm.
Now it seems like almost everything is VA approved. These approval processes, without going into too much depth here, they what they're looking at is things like HOA budgets,
Right.
HOA insurance,
Yeah.
number of saturation. So how many VA loans, FHA loans? They're looking at all that kind of stuff. So oftentimes, if something is FHA or VA approved one day and then the next year it's not, that's because something has changed within the complex that's a problem. Normally, I would say, Rick, that it's probably going to be a non-issue if there's a VA loan that they're assuming already in that complex.
Are there any tax implications for the seller or buyer?
No, I mean, it's going to be, again, it's going to, outside of like the behind the scenes stuff that happens with the buyer, right? It's going to be a very normal purchase transaction,
Mhm.
right? It's the primary, the seller's going to walk away with their proceeds. The buyer's going to just obtain a loan with a low
Okay.
interest rate. Yep. Everything transfers to the buyer.
Okay.
The
Okay.
statements, everything, W-9s, whatever,
Gotcha.
all that stuff
Okay.
is going to be to the buyer.
So in that case, it's no different than had the buyer purchased the
Right.
property way back in time.
That's right. That's exactly
Okay,
right.
cool. Well, that's
Yeah.
all the questions that I have, Nick. Thank
Yeah.
you so much for clarifying all these
Yeah,
myths.
absolutely, man. And listen,
Yeah.
we know assumptions are kind of a weird, like I
Mhm.
said, they're not new. They're
Mhm.
just kind of new to the market because they're only a thing when there's a margin in rates
Right.
and like a quick margin in rates, right?
Right.
So I think we're going to get back to within the next year and a half where you're not going to see quite as many anymore, and people are going to have. And I think that's better because I think it's going to give buyers an option of, gosh, I really didn't want to bring this gap to
Right.
closing, but when VA rates were 7.5%,
Right. Right.
you
Gotcha.
had to figure it out, right? So,
Right. It's
um,
all about the numbers.
It's all about the number.
Yeah.
That's right.
Okay, cool. Well, Nick, thank you so much for your time and for your clarification. And if anybody needs more information, I'll have them get in contact with you.
No, I appreciate that, man.
Alrighty. Thank you so
Okay,
much.
Rick. Talk
Have a
to you.
blessed day. Thank
Okay,
you.
you too.
Bye-bye.